Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. Today, we have a special guest in the studio, one of our own, Bill Collier. Bill Collier is a professor here as well. Bill Collier, thanks for being on the show.
Thanks for having me.
Delighted that you're here. So a couple of things. Let's get yourself introduced properly. So please introduce yourself. One of the things I want to say thank you for at the top of the show is that in addition to being a VC in the market here, you're also, kind enough to spend some time here on campus with our students and running our venture capital class as part of the GW Investment Institute. So I want to say thank you for doing that. But maybe you could give us a little bit more of an introduction for yourself. And maybe part of that is your origin story, because you're also a double GW alumnus.
That's true. That's correct. Yeah, no, thanks for having me, Professor Lake. Really appreciate it. I still want to call you Professor Lake out of respect here.
Thank you.
But you hit the nail on the head. I think this is my 5th semester coming up this spring.
Nice.
Teaching the venture capital course at the GW Investment Institute.
Thank you.
It's a lot of fun, super rewarding. I mean, I love working with the students, helping them kind of understand the VC lingo, how to be a venture capitalist, how to identify promising companies, kind of walk them through the diligence process. It's a lot of fun, and I really enjoy it. As I mentioned to you before, it's the highlight of my year. Like, I really enjoy doing it. But my origin story. So I'm a Washingtonian born and raised.
Great.
I was actually born.
Rare? That's a rare setup.
A rarity. So I was actually born at Columbia Women's Hospital, which is literally a few blocks from here. Now it's like a condo.
Now it's Trader Joe's, right? Plus condos.
Now it's Trader Joe's. Now it's Trader Joe's and condos. But born and raised in DC, love the city, left for a few years for undergrad, ended up coming and transferring to GW.
Oh, nice. I didn't know that, actually.
Yeah, as an undergrad. And I graduated in 2010. My major was environmental studies and geography, a double major, very different from what I'm doing today.
Absolutely.
As a venture capitalist. But when I got out, I really didn't know what I wanted to do, right? And it's
many people are in this, area.
Yeah. So, fast forward today, I'm a principal with Nobles Ventures. We're a corporate fund. Our parent company is Nobles. We invest in the best ideas for the best of reasons. That's our tagline.
Nice.
And
good tagline.
And as a strategic investor, what we look to do is invest in companies that better support our parent company's customers.
Okay.
Right. So Nobles, we're about $500 million in revenue. Our goal is to get to $1 billion in revenue by 2030.
Nice.
Our CEO, Millie Corrigan, is part of her 2030 vision to get to that goal. There's 3 prongs. There's 3 levers that are helping us achieve that goal of $1 billion in revenue. It's organic growth, M&A, and ventures. So nice. Ventures, we really kind of launched in 2023, a new initiative, a new program for Nobles under the leadership of Millie, who's great. We are investing in everything from space tech to AI to non-clinical life sciences to critical infrastructure.
All the exciting things.
And it's great because we have a really broad aperture and we're looking at a lot of different stuff. From a velocity perspective, and velocity means like number of deals per year. We're looking at doing 3 to 5 deals a year. We're typically pre-seed to Series A.
And these sound all very strategic, in line with the mission of the growth for Nobles overall.
Correct. And I think that's the difference between a pure financial VC versus a CVC or a strategic firm. What we're looking to do is to identify trends or identify technology that helps us expand revenue for our existing customer base, right? And obviously, we want to invest in sound businesses that are going to receive future funding and continue to grow at a nice clip and a nice rate. But really, the value and the driver for us is trying to expand revenue with our current customer base.
Excellent. And we're going to come back to the VC space here in a second. But let's take a small path down to the class. And so just want to talk a little bit about the class. As you mentioned, you've been teaching it for quite a few semesters now. Which we're super grateful for. Again, could you maybe just let everybody, the viewers and the listeners know, what is in this VC class? It's part of the GW School of Business in the finance department and associated with the GW Investment Institute, just for everybody to know sort of the setup and the context there. But maybe talk a little bit about the class and how you approach the class and the students.
Totally. What the goal for the class is for students to understand what an attractive investment is. And then the second phase of the class is to come up with a startup concept,
Okay.
right? So, and it's actually inverse. It's coming up with a good startup concept, and I help them incubate that idea.
Okay.
We help them, hey, nice idea, but you might want to think about something that's a little bit more scalable and venture backable. And we
Right.
help the students kind of understand what that means.
Yeah.
So the first half of the class is students come up with their own startup idea,
Nice.
right?
Which I'm sure is a lot of fun.
It's a lot of fun. It's the most fun. I love doing that and helping the students bring their ideas to vision, bring that vision to reality, right? So they come up with their own startup concept. We help them pivot and focus on what might a good concept be. They develop it. We bring in subject matter experts and guest lecturers to help also vet and give their feedback on these concepts.
Right.
We do it in conjunction with the OIE, the Office of
Entrepreneurship and Innovation.
Innovation
and Entrepreneurship.
Innovation and
OIE.
Entrepreneurship.
Shout out to them, Bob.
Shout out to them. And the reason being is GW actually hosts one of the largest student pitch competitions in the nation.
Right. Which is a great feather in our cap here at GW.
And it's amazing. And we take advantage of that with the class, right? So students come up with their concept, they enter the competition. It's part of the curriculum. So that's kind of the first half, the first phase. Phase two is once students kind of build their own concept, they identify a company that's raised venture funding that's sort of in the same vertical or space that their startup concept is, and they build a full investment memo.
Nice.
So they do their diligence on this company. They talk about their previous fundings and how they've been growing or what challenges they've faced. And then they come up with a hypothetical scenario of what should happen next for that company. So it's kind of a cool kind of wing-to-wing view of coming up with your own startup, incubating, developing that idea, but also what my day-to-day job of is finding companies and doing diligence on companies and writing investment memos for my investment committee. They're going through that entire process as well. So it's kind of cool to see both sides of the coin.
And for my knowledge, this remains a very popular class.
Oh, I mean, I think so. I think we always have a wait list. So
I think so. I think it's full, and I think you're very popular as a professor. So again, thank you for doing that. I do think it's important, and we'll lay some of the class in here in the education. Obviously, that's part of what we do here at the Investment Institute, or a big part rather. And so we'll lace this in, but let's now move on, or back to rather the venture capital business. And so you're a venture capitalist. You've been doing this for quite a while now, and you're certainly one of the well-known and recognized members of the venture capital business in the DC region here, VCDC. Could you talk about maybe something that you're excited about? So the market is, changing pretty dramatically. What excites you? What's new or what's interesting? What has changed? What are your thoughts?
Yeah, no, I think, look, with the fundraising market is a lot slower today as it was in 2021, 2022, right? Right now, our portfolio is performing well. What I'm really excited about is the renewed interest in space.
Okay.
I think a lot of it has to do with all of the activity around SpaceX.
Oh, of course.
The reusable rockets.
The Mechazilla catch of the rocket, I think, gets everybody fairly pumped up, right?
It was insane, right? Like, it looks not real. Like, it looks like CGI. It's a super important accomplishment. But what I'm excited about is the renewed interest. It seems like folks are coming back into the market. Folks are putting more money in behind companies, and I think it's definitely needed. I also think what we're seeing, especially in the space vertical, is a renewed focus on what I call less sexy industries. Right? There was a lot of money being poured into futuristic 3D printing manufacturing
in low
units
Earth orbit
in space, right? And other very capturing and refurbishing satellites in orbit.
Yeah,
but I think we're coming back
kind of
to
a James Bond style setup,
a little James Bondy. But I think we're coming back to Earth, no pun intended. And I think we're trying to focus on some of the more tactical, impactful things. One of our portfolio companies, Scout Space, what they quite literally do is provide eyes for satellites.
Oh, wow.
And they're agnostic to platform. You can put a Scout sensor on any satellite, any bus, and it's a very scalable model.
Okay.
And I think just focusing on those sort of like meat and potatoes type issues that we're seeing in orbit with, conjunctions, which are like almost collisions or collisions and debris.
Right.
You're going to need to do those little things before we can do the James Bondy stuff
Right.
in orbit. Does
Yeah.
that make sense?
Exactly. No, it makes a lot of sense. It's sort of like the blocking and tackling, if you like to use a sports analogy here, of, we got to do these things first before we can move on to the more glamorous things or the more, let's say, high-tech things that involve sort of a foundational layer that needs to be built first. So let's move on a little bit to like particular companies. You don't have to talk about any particular company in the portfolio, but could you just talk about in general for viewers who are maybe not as familiar with a startup? Like, what are some of the common challenges that you see as a venture capitalist, and what are some of the common opportunities as well?
Yeah, no, I think going to the challenges, and we were talking about this earlier. I think in the early 2020s there was a lot of free flowing capital.
Okay.
I think a lot of startup founders saw that as sort of a land grab opportunity to raise large rounds.
Let's get out there.
Let's raise that $50 million,
Right.
$75 million round. And I don't think they were super intentional in how they were going to leverage that funding to get to an inflection point that validated the valuation they were raising that money at, right? So, wait, what was the question again?
No, the challenges and opportunities. So you can continue on the challenges here if you don't mind.
Yeah, so that's definitely a challenge, right?
Yeah.
What we're seeing out in the market is companies that are raising, that have raised a ton of money, that are raising bridge rounds, just trying to kind of survive to get to that next catalyst. At the same valuation they raised these huge rounds at, or even significantally lower valuations.
Oh wow! So some are doing down rounds.
Some are doing down rounds, and we're seeing a lot of consolidation. We're seeing a lot of acqui-hires, like companies absorbing other companies and bringing in folks, to have an exit, but not the most attractive kind of exit for all investors. So those are sort of the challenges. I think the good news is if you're able to, from an investor standpoint, if you're able to identify some of those companies that are capital efficient, those are the ones that we're really seeing shine, seeing succeed.
And when you say capital efficiency, can I follow up on that just a second here? So for people who are not familiar with what that means in a VC world, what does that mean? Could you give us a few details or maybe an example?
Yeah, that means that they're raising significantly less money than some of the companies that have raised these larger rounds, and they're able to grow at a nice rate and grow at a nice clip. And what it means is that the people that are working within these companies are wearing lots of hats. They're doing lots of jobs. Instead of hiring up and having heads of different business units and having a full team under each of those business units, people are kind of doing lots of different stuff. And it allows them to function and grow without spending a lot of money. So for instance, we have another portfolio company called Sedero, and they're doing great. Another example of a company that's been capital efficient. They've only raised $2.5 million in dilutive funding. The CEO is the salesperson. Oh, wow. So he's running the company. He's overseeing strategy and growth. And at the same time, he's the guy who's taking all the meetings and closing the deals, which is great, right? From a capital efficiency standpoint.
Absolutely.
But when they go and raise their next round in Q1, they're aiming a Series A. We're hopefully going to bring in someone to kind of take that off his plate, so he can do CEO things, right? But that's what I mean by
being more efficient with that capital. Yeah. And maybe talk about, it sounds like with this in mind that investors are, getting more rational about, what it means to invest in these companies. Is there a bigger push to be profitable earlier now, or are people giving a lot of runway? It sounds like that's not the case anymore. Is there an expectation that, companies are going to be profitable earlier in their life?
I don't think there necessarily is a expectation that they're going to be profitable earlier. I think what investors are looking for is securing a large pipeline of opportunities and having a high rate of winning those opportunities. I think if you're profitable, it's great. It's good for you as a founder. Yeah. I think what's more important is that there's a large enough market that this startup is penetrating, that's entering the market, and they've got a nice pipeline for future revenue. I think that's kind of the key that a lot of VCs are looking for. And I want to go back to earlier. You mentioned something about like the DC specific market. The DC market's great. I think we're seeing a lot of folks kind of moving into DC, planting a flag in DC.
Nice.
I don't know if you heard, like Anderson Horowitz is opening an office in
I did
DC.
not hear that.
I think a 10,000 square foot
really?
office downtown.
Excellent.
Which is super exciting.
That's news to me, so we have it right here.
Yeah. And then who else? We've got Point 72, which is Steve Cohen's firm in New York. We have a few folks down in DC. I think DC is a very underestimated market. I think the proximity to all the three-letter agencies in the government is also beneficial. And regulatory, like we've got the ear to the ground in terms of what's coming down the pipe.
Right, what's happening,
of a regulatory standpoint. Peter Walker, who's the head of insights for Carta, recently said that DC was the number 5 venture market in the US.
I did see that,
which is super exciting, and I love the data that he.
I think you sent that out on LinkedIn.
Yeah.
I think that's how I saw it.
I think it's great, and I love the content they're putting out. But in addition to working with Noblest Ventures, I'm a volunteer for a group called VC in DC.
Yeah.
So we've been kind of volunteering and supporting this group for the last eight and a half years. Membership is up to over 550 members.
Oh, wow.
Membership's free. It's all institutional VCs. So of those 550, represents about 230 or so venture firms, all institutional venture firms. 2/3 of them are in the region. So there's an active market here.
Absolutely.
There's a bunch of active firms here, and it's funny because you sit down with folks and they're like, "Oh, I'm raising a round. I gotta fly up to New York, or I gotta go down to Miami, or I gotta fly to Silicon Valley to raise that round." No, there are so many active VC firms here, and I'm really bullish on the DC market.
And what do you
from
think
a venture perspective.
the changes? Why do you think that this is happening? Why are people more interested than they were before? Well,
I think there's a big push for dual use and defense tech.
Okay.
So I'll kind of break that down, because someone the other day said, "What does dual use even mean?" So it's companies that are interested in selling to commercial clients, like your standard, enterprise
B2B,
client, B2B, or the government, right? The government nut is a tough one to crack.
Right.
Right.
So let me just to clarify, this would be like enterprise software. So Oracle sells both to companies and they also sell to the government.
Exactly.
That's the dual use you're talking about.
Exactly.
Okay.
And then defense tech is, defense-related technology companies.
So the most high profile in the region are like Lockheed Martin, as an example.
Exactly. There you got
and the big stuff.
Yeah, Lockheed, SAIC, Booz Allen, all of them venture arms, and they've got great teams. Noblest Ventures, what we do as well. But yeah, it's a tough nut to crack. And because it's a tough nut to crack, I think it's important to get strategic investors on the cap table.
Right.
Because investors like Noblest Ventures, our parent company, has contracts with some of these agencies. We know what their needs are. We know how to interact with them.
Right.
We know how to get portfolio companies into the fold in terms of getting a seat at the table to kind of pitch these folks. But I think that whole ecosystem is why DC, I think, is seeing a lot of interest from some of these larger firms that are trying to increase their presence here in the region.
That's excellent.
Yeah.
I'm going to follow up on one of the comments you made. So people often ask, when they're trying to learn about VC, why is it important who I partner with? Is it just one check versus a different check? And you were highlighting a little bit about, there are differences in the things that you would want. As an investor, there are certain things that you're looking at. But then as a company, let's say I'm the CEO of a company, could you explain to a CEO why they should invest with either Noblest or any other type of company? What advice would you give a management team about how they should fill up their cap table, how they should partner with these VC firms? Because it sounds like it's not just capital.
No, that's good. That's a great point. I think you're going to want to, first of all, fundamentally, you want to work with people that you enjoy working with, right? So I think the
that's
strategic,
useful, yeah.
the door opening, the introductions, the network, all those things are obviously super important. But I think fundamentally you want to work with good folks, right? And that's sort of our thesis. We do have a investment criteria, and part of that criteria is strength of team. Is that team receptive to feedback? So you want to have kind of a on both ends, respect for the startup founder. You want them to have respect for the VC and for them to fundamentally get along as people, right? But as you mentioned, you want people on the cap table that are gonna work for you, right? You're gonna want people on the cap table that have a robust network of other investors that have investment theses that fit your company, right? You don't want to just make blind introductions to all these different firms and then have the founder spin their wheels and none of these introductions close to checks written, right? So you got to have that network built. What else? I think for the strategics, it's really, as we mentioned, the visibility to the customer base.
Yeah.
Right. And I'm not going to say the specific customer of Noblis's, but we wrote a check into Sidero. It's a digital twin simulation platform in June. We've already closed a deal with one of our customers, and Sidero is part of that deal, which is pretty unheard of for like less than a 6-month investment window to actually closing a deal. But being able to do those sort of things, effectuate revenue for the company, introductions to capital, all those things are
so the positive flywheel effect.
Exactly, the positive flywheel effect, and it's really easy to do when you have respect and enjoy working with those founders and their teams as well.
Right.
Yeah.
Excellent. Well, that's super important, and thanks for mentioning that. Now, sort of, maybe let's move on. If you're giving advice, and this is a same kind of category, let's say, rather than moving on, advice to entrepreneurs, like if you have an idea, and this is for anybody that's watching or listening, like what advice would you give to a startup as a VC? They came to you and said, "Hey, I got this idea. I'm going to do, whatever it is, X, Y, Z." What would you say to them first?
I would say, do your research, right? As a VC, we dedicate so much time to diligence and research. I want, before you bring something to me, an idea, concept, I need to see that you as a founder have done your research on the market size, what the total addressable market is, what the serviceable addressable market is, any sort of competitive landscape, like what other competitors are out there, what are they doing? You need to have product market fit. You need to do some surveys, talk to customers, understand the customer needs, right? If you do those things, those are some of the fundamentals. There's other things as well. But basically, in a nutshell, you need to put in the work up front.
Yeah.
Also, I don't think you necessarily need to raise money to build an MVP, a minimum viable product, right? If there's enough need from the customers, you can, maybe it's a little bit less automated. Maybe it's a little bit more of that founder doing the work.
Right.
But I feel like you can at least do enough to get some feedback from potential customers, maybe even a letter of intent that says, "Hey, once this is built, we will be a paying customer." I think if you do all those things, you're just setting yourself up for success later down the road.
One follow-up there. Lots of people talk about product market fit. In your words, could you explain what that means?
Yeah, that means that there's a real need from a customer standpoint, right? It's not a nice to have, it's a must to have. It's I'm willing to make a sacrifice for other things to dedicate resources to acquire that product.
So it's not just an interesting idea, it's an actual solution that somebody's willing to pay for.
Exactly. And I'm not just saying this, like I put this into practice. So I've been speaking to an entrepreneur for 3 or so months now, very early stage. She's raised no dilutive funding. So she's just bootstrapped this company, has a really interesting product. It's an AI powered platform. I'm not going to get into any other details other than that. But she came to me and she said, "I want to raise this amount at this valuation." I said, "Hey, I think what you're doing is really interesting. I think we should continue this dialogue, and I'd love to learn more about what you're doing. I think you should raise a lot less money at this valuation, just given the stage of your company.
Right.
And what I think would justify the valuation that I'm putting on the table for you is you need to get some letters of intent and some commitments from potential customers. Because you're telling me you're talking to all these folks, and that's great, and they're excited about it. But until you have some sort of signed document that says, hey, when we go live, we will sign on as a customer.
Yeah.
So in the last 4 months, this entrepreneur, this founder, has secured $4 million in letters of intent.
Nice.
And purchase orders for the product that she's developing. And now we can much more justify a reasonable valuation that makes sense for us. It makes sense for her and her company. But yeah, that goes kind of with that product market fit. Like, Excellent. Are people willing to sign on the dotted line and say, hey, once you have the product and it's fully baked, we will pay? That's important.
You mentioned artificial intelligence. That's obviously, along with space being super interesting, again, artificial intelligence seems to be, dominating all the conversations about business and investing. Could you maybe talk about it from your perspective? What do you see out there from AI? And, what's investable, what's not, what's hype, what's reality, in your words?
That's a good question, Professor Lake. That's a very good question. I think there's a lot of hype. And it's tough because a lot of these companies, we went back in the beginning, we were talking about capital efficiency. A lot of these companies are raising a ton of money, burning through a ton of money, right? And it's difficult for, a smaller, earlier strategic like us to really compete with some of these large, huge firms. So I think there's a lot of hype. I think there's a lot of quality deals out there. I think you got to sift through them. And that's why I feel lucky being at where I am, because part of our diligence process is we're able to reach back into Noblis's deep bench of subject matter experts.
Okay.
So Noblis is about 3,000 employees, 60% are advanced PhDs. So we've got experts in AI, in space, and all these different critical infrastructure and autonomous vehicles. So when we're doing this diligence, we're able to reach back and say, hey, is this actually is this real?
Yeah,
Is this legit? So long story short, I think we're seeing a lot of hype. I think we're seeing a lot of insane valuations. I think there is some really impactful work to be done out there. But what I enjoy more are companies that have AI as part of their solution, but that they don't lead with it. They're not like, I'm an AI company. No, we're a digital twin simulation platform with a component of AI that helps us automate things, right? But to me, it's a red flag if
you're leading with
you're
only
leading
that.
with it.
Yeah.
You're leading with it, And there are some companies that are pure AI where that makes sense, but to me, it's something to
be mindful of.
Yeah.
All right, so now let's move to wrap up here. So thanks, Bill. This has been a great conversation, Professor Collier. Very much appreciated. So now maybe pulling this all together and then really talking about, advice here. If you're, giving advice to a student or anybody for our viewers or listeners out there that want to get involved in either the entrepreneurship side of the business or the VC side of the business, and they haven't done any work on that yet, what advice would you give them of how to actually get started?
Yeah, no, that's a great question. I think
besides taking your class, obviously.
Besides taking the
number
class.
one, take Bill's class.
Yeah. No, that's a great question. And I think you have to be very intentional in how you spend your time, I think. Something that I did, and we didn't cover this on the origin story, but I took advantage of my time as being a full-time undergraduate student.
Okay.
And also when I was getting my MBA as a full-time MBA here at GW, great program. Leverage that time to get really impactful internships that align with your story and what you're trying to achieve. And also network. Network is super important, because when you're a student, you have an excuse to try to interact with and talk with and build relationships with folks that are much later in their career journey, and that might be at the executive level, because you're just exploring and you're trying to learn, and people are much more receptive to having that conversation.
Willing to help out. So what I would say is leverage your time to try to secure great internships, build the network, and be intentional in building your network, and also try to add value, right? It's easier said than done to try to find deals to send over to a VC to try to be like a sourcing agent or sourcing partner for some of these VCs. That's not super realistic, but I think if you are keeping your ear to the ground, if you see any super interesting companies that might be a good fit
for one of these people you're trying to network with. If they're a VC, send them the deal. I think that they'd be much more receptive to building that relationship.
Well, I think that's excellent advice. I think that's a great place to stop. I want to say thank you for being on the show. Hopefully you'll come back
Thanks for having me.
to the show another time. Very much appreciated. With that, we're going to close here. That's a wrap for this episode of Market News with Rodney Lake. We'll see you back on the next episode. If you have comments, we'd love to hear about them. Tell us what you want to hear about. Obviously, we have a limited thing that we'll cover on the show. But thank you, and see you next time. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.